Hello and welcome. You're just about to see an exclusive Arcanum Ventures Boom Room podcast interview with Cogito Protocol's very own Norton Wang. Norton comes to us with a wealth of experience in AI development, RWAs, and blockchain building. If you want to know more about Cogito, we did do a video previously that will explain what the project's all about and how it's changed since then. We hope you enjoy this interview.
Welcome everyone back to another exclusive Boom Room interview. This is Sasha with Arcanum Ventures. I'm here with my good friend and colleague Carmelo from Arcanum as well. And today we're interviewing a very special guest, Norton Wang, the CTO of Cogito Protocol. Cogito is developing a protocol that allows institutional grade investing in assets backed by real world assets, most notably treasury bills, green bonds, etc. We've got him here to discuss his journey with Cogito Protocol, what they're developing, and what the future of real-world asset tokenization looks like. Norton, thanks so much for calling in. It's great to see you and great to meet you, actually. This is the first time that I think we've met like in video or in person. We've only spoken chat before. How are you doing?
Yeah, very excited to be here. Thank you guys for having me.
Well, very exciting to have you here. I think I mentioned to you before, Carmelo and I, we really love the concept of real world asset tokenization. And it makes sense. It's starting with institutional financial instruments, traditional financial instruments, things that, introduce, the idea of yield being generated from investing in these assets without the risks involved that you might see in volatile cryptocurrencies or other things. But before we get into that, I want to ask you a fun yet stupid question. Am I pronouncing it correctly? Cogito Protocol?
So we call it Cogito. It's from the Latin phrase cogito ergo sum. I think, therefore I am. But I mean, no one speaks Latin anymore, so I don't know if it's Cogito, Cogito. Like, I've heard everything.
Oh my God!
I think we have the same problem with our name of our own company, Arcanum.
Yeah, Arcanum.
Also Latin.
You know what? Funny enough, Cogito was the only one I didn't guess. And for our viewers that might be familiar with some of our other content, we released a 10-minute investor eye test on Cogito Protocol, diving into the project within like 10 minutes and understanding if it's something that we might invest in. And I think in that video, we absolutely butchered the name in like 5 or 6 different ways. But it's good to know that, that we've got the right pronunciation now. So Norton, I wanted to ask you a little bit. You've got some big experience in the world of technology. I think you worked with a number of other companies, like big name companies like TradeBlock, Axoni, and Dfinity. Can you give us a little bit of background about yourself and your experience and how you came into working with Cogito Protocol?
Sure. Yeah. So right out of college, my first job was at a startup. We were 3 guys working in a WeWork office. We were doing, fintech sort of stuff, but we ran out of money. The 2 founders were early to Bitcoin. So they were mining Bitcoin, in 2011. And so that's how I got introduced to crypto. And they then started a new company called TradeBlock. And back then, it was really hard to get market data. It was really hard to have like a single source for news and all of this on-chain data. So we were building something like a Bloomberg for Bitcoin back then. And we worked on that for several years. And around 2015, the whole idea of enterprise blockchain became a thing. We started talking to institutions about, oh, maybe you can use this blockchain technology to synchronize your data, have more transparent way to settle trades. It'll be faster. It'll have all of these advantages, right, that we know about today. But back then, institutions were really hesitant to touch the world of public blockchains, right? They wanted private consortium chains that they could control, that they could run their own validators on their own systems. And so that company sort of pivoted or split off into a new company called Axoni. And so we worked on enterprise blockchain, right? Actually, we called it like digital ledger technology because, blockchain was sort of not a thing that institutions wanted to talk about. So we basically upgraded their 50-year-old technology to use EVM, to use Solidity, to use like Geth forks, and the industry sort of developed along that path for a few years, and there were plenty of proof of concepts released. So many press releases saying like, oh, X, Y, and Z institution are now working together to settle like X, Y, and Z derivative on X, Y, and Z private blockchain, and so that was cool and all, but it didn't really go anywhere since we were just upgrading like internal technology, and nothing really changed. And we found out that a lot of these institutions, they didn't want to run their own validators. They said they did, but they don't actually want to. It's a lot of work, and they already have their big ass SQL databases running just fine. So why upgrade? So then I left that world, and I started exploring what was going on in the rest of crypto. And so around that time, this was 2018, EVM was popular for ICOs and such, but people realized that, oh, this technology, has bottlenecks, right? And we need to scale the layer one. So many projects were developed in that time, Avalanche, Cardano, Algorand, Dfinity, Polkadot, right? Tezos. So many L1s came out around that time. And so I joined this project Affinity because, I met the team, it was a strong, sharp team. And we set out to build a L1 that, improved upon consensus and used WebAssembly and had all of these different improvements in technology. And so I worked on dev tools and some of the programming language stuff, and also helped build some test applications on there. And that was cool. That exposed me to the world of, building systems, right? Using Rust to build your blockchain. And, what it takes to really scale out and develop like L1. You need a lot of tools. You need dev tools. You need, all these tutorials. You need YouTube, right? And now here we are today, 2024, we have all of these different L1s, L2s, L3s even. I don't know what L3s are, but they exist. And projects are being developed in DeFi, in gaming, in AI now, real asset tokenization, obviously. And so we are really beginning to reach a point of maturation across some of these different fields, and it's still exciting. Like so much progress is being made along L1s and also on the app layer, and so yeah, it's a very exciting time in crypto.
And that's fantastic. It's not very often we get to speak with individuals that are familiar with the token launch space, that have created a startup company that incorporates cryptocurrency or digital assets, launches that token. They go through the whole shebang, but they come from a more, let's say, institutional or traditional financial background. It's nice to see that crossover. And it's great to see that you are in some ways leading the way and bringing in this institutional interest into this space, outside of just, like Bitcoin hedges for ETFs or other things like that. So that's fantastic, man. And it's been an amazing journey so far, I'm sure.
Mm-hmm. Yeah, definitely.
It's even more rare that I don't think I speak to people very often that have only worked in the Web3, cryptocurrency, Bitcoin space. Like, that's really fascinating. Usually people transition over at one point or another, but it seems like straight out of university, you just went all in on this space.
That's wild.
Yeah, exactly. And that's sort of the advice I would give to, college grads now, or people in college. If you don't know what to do with your career, just do crypto, because it's going to be new and exciting for a very long time, and you can make your own path.
But even like back at that time, that seems like a very risky career move, right? I mean, what were the thoughts going through your head when you decided, I want to, like, besides pursuing a job in maybe traditional finance or the world of development, I want to dive right into this industry that at the time appeared to be very shaky, very volatile, very uncertain, right?
Yeah, I mean, I completely understand that sentiment, because even at that time in 2015, we were getting paid in Bitcoin, and 2015 was a rough year. My paycheck dropped like 10% every week. So, it was like, does this thing have any values? Like, why would anyone ever use this thing? It's slow. It doesn't work. The programming language sucks. But, I've always sort of been a risk taker. I like being on the cutting edge. I like technology. I realized that, I'm a fresh grad, right? I can always go pivot to a new industry, go back to school or whatever if I need to. So I'm just going to take risks because I'm young. And so why not?
Yeah.
Speed.
I think it takes a special type of person to join this industry. I mean, even so earlier on, it takes a really special type of person, but yeah, now even like there's a lot of risk involved. So I like working and speaking with people that are really the opposite of risk averse. Like, I don't know, you're not afraid to fail. Like the best founders in the space fail often, and then they learn. It's the best teacher. And there's a lot of failure going around in the Web3 space. But yeah, you also have that really, really rare upside. Crypto has that potential. I don't like saying 1,000x, but really 1,000x potential. Like you can really do crazy stuff that you can't really see in other industries. So I definitely align with that.
Not financial advice. Speaking of pivots, I want to talk a little bit about Cogito protocol. And so, like I mentioned before, we created a 10-minute investor eye test video when you guys were actually taking your token to market. And it seemed like at the time, the focus on the protocol was really more so around stable coins. And I think you referred to them as tracer coins. But since then, there's been a shift more towards these like traditional financial instruments. And there's a number of, I think, funds. There's maybe 3 major funds or institutional grade products that are listed on the Cogito protocol or Cogito Finance website. I think one is like a T fund, and then a G fund, and then an X fund, all essentially correlating to like different types of these instruments. So can you give us a little bit of a context? Like why was this pivot away from stable coins towards these instruments made?
Yeah, so the original thesis behind these tracer coins was that we don't really have great alternative payment currencies, right? So the idea of trying to pay with crypto has been around, right? I mean, Bitcoin was a peer-to-peer cash, system, but trying to pay with a volatile currency doesn't really work. And the alternative is just stable coins, which are they're better than doing wire transfers, right? We're paying with cash, but they're still dependent on centralized governments that can just print money, whenever they want to. So the idea was to have an alternative, stable store of value that could be used as a medium of exchange, right? Used as money, basically, that was not tied to governments. And the idea was to sort of have a stable coin pegged to some green, indices, right? So that so like if the environment did better, then this store of value would go up over time. The challenge was actually trying to build that. From a DeFi perspective, right? Essentially, what you need is a token that appreciates, 1 to 3% per year, and so you could take that. You could take USDC and you could deposit that into Aave, right? And then you get a USDC, and then that effectively represents this stable coin. The other way to do it is to have this weird system of balances and algorithms and dynamic rebalancing, whatever, that was tried by Basis Cash. What was the other one? Ampleforth and notably Luna Terra. Then we realized, okay, without any fundamental value, any collateral backing these stablecoins, it ultimately just crashes. So we hit a roadblock and found it very difficult to actually implement this type of alternative, stablecoin. So that's when we realized, hey, if we actually want to just have something that represents, the concept of green, why not just buy green bonds? They exist, right? They yield 5% per year. That's pretty good. And from there, we just went straight into tokenization because that's the only way to do it, right? That's the only way to bring green bonds on chain.
So that's fantastic. Honestly, such a simple and elegant and sensical pivot, just cutting out this sort of middleman and bringing in these green bonds, these T-bills. And now there's a lot of interest in the space. around tokenizing some of these risk-averse financial instruments. I think there's a lot of companies doing this, but I think Cogito is the first one I'm seeing is focusing on green energy initiatives with green bonds. It's super cool.
What has the demand been like so far? Like, what kind of clients are looking to onboard this sort of solution? Like, I think I saw on the website that DAOs, for example, treasury management, could use this. But have you had any roadblocks getting clients on board for this?
Yeah, so interest has primarily come from DAOs or crypto native startups that have raised a bunch of cash, right? So they're sitting in USDC or USDT that pays 0%. So it makes sense for them from a treasury management perspective to just buy T-bills with it. I think one of the biggest roadblocks right now, especially for DAOs, is because some of these DAOs are not incorporated entities, right? They're just a loose collective of individuals. Some of them may be based in the US, right? And so from a KYC perspective, because we run a institutional product, right? We are licensed in the Cayman Islands, and our investment manager is registered in the British Virgin Islands, right? So there's a lot of KYCing that needs to happen. So how do we KYC a loose collective of individuals, right? That becomes sort of a challenge. And our fund administrator needs to get comfortable with that. And then all of our third-party dependencies, they all need to get comfortable with all of our clients. So KYC, I would say, is the biggest bottleneck. But I think fortunately now that is 2024, right? A lot of these DAOs, a lot of these native startups, like they have proper entities, and they're all based in Caribbean islands or like Panama or whatever. So it's improving, and people are starting to understand that you actually do need proper paperwork when you start your entity. Yeah.
Oh man, it reminds me of a story. I think back when Carmel and I, we worked with a venture studio, and we had helped launch a number of token startups. And they had to go through, obviously, the onboarding process, KYC and KYB for businesses. There was one in particular that kind of just like, I remember when it was KYB time, they kind of got confused. They said like, I don't know what you're talking about. We're a DAO. We don't have any documents. Yeah. We don't have like a registered business yet. They're raising funds against their token. But now you see a lot of these DAO LLC corporations, this corporate framework that's being adopted globally. It's something that's very common now, and it's great because it means that all of a sudden there's more accountability, there's more regulation, there's more security for the everyday investor.
Mm-hmm. Yeah. I mean, back in 2014, I was a bit more anarchist, and I was like, we don't need regulation, right? We are building a completely new system. We don't need any of this existing regulation. But fast forward 10 years, now I realize, okay, many frauds happen in this space. Investors should have rights. Investors should be protected. You should be able to go to court against somebody that stole your money. You should have proper recourse. And of course, building institutional grade products, like that's a given, right? You need this in order for institutions to actually deploy their billions of dollars, right? You can't have it. You can't, move crypto to the biggest asset class without regulation.
100%. Yeah, actually, that brings up a good point, because I know one of the main features of Cogito is the compliance, and you're working with the authorities or different jurisdictions. So has there been any major issues with this? Because one of the RWA space, as much as I hate that term, RWA, by the way, one of the things that we kind of were scared off by is the lack of jurisdictional oversight or compliance. Nobody knows what's going on or what the case will be next year or 2 years from now. So the tech is there, but the compliance issues are why we're kind of spooked away from RWAs.
Mm-hmm. Yeah. So I think the big open question right now is what will happen with the U.S. and hopefully by the end of this year, with a new president and a new SEC, we get a better framework for doing crypto in the U.S. because that's really what's needed here. U.S. is the biggest capital market, and it should be a dominant player in this space. For us though, We initially wanted to go with institutional brokers, right, which is a very popular broker. And after spending a few months talking with them and doing their KYC documents, they came back to us and said, "Oh, sorry, we can't take crypto clients on at this time." And we were pretty surprised by that because, why wouldn't they want, extra money going into their exchange? It doesn't make sense. But I think that tone should change over time. And there are plenty of other brokers and custodians that are comfortable with crypto that we are, going with. In terms of jurisdiction, right? So we're based in Cayman Islands, and the Cayman Islands, I think as of 2022, they passed their Virtual Asset Service Provider Act, which gives pretty good clarity on what you can and what you can't do and what you need to register with the monetary authority for. There's lots of Caribbean islands, places like Hong Kong, I think, are developing really well. And so it's these places at the forefront of regulation that will be good launching pads for the next wave of crypto startups.
Yeah, it's good to see that some jurisdictions are actually creating a framework that you can work off of. And I guess going back to what Sasha said before, but the KYC protocol for launch pads or exchanges is anybody from these countries, you're not allowed to use this. And that's all they can really do. They can maybe require or ban them from certain IP addresses from certain countries, but you can get around that quite easily with a VPN. But yeah, that's the bare minimum effort you can really push forward. And outside of that, there's not much you could really do to prevent access to stuff unless you KYC or have something on your own platform to identify users.
Yeah, it's crazy.
Exactly.
I think this industry is it's necessitating so many new developments from the regulatory side, from the oversight side, and a lot of these assets are pushing the boundaries of crossing over between one category or another category or multiple categories. So I think a lot of many regulators need to take a completely fresh look at a lot of this stuff. On the same topic of DAOs, though, I know you guys work with a lot of DAOs. You said a lot of the interest has been coming from DAOs that are looking to smartly and maybe risk-free or risk aversely manage their treasury. And so I wanted to ask you, because we know that Cogito had been working with Singularity DAO for a long time now, and Singularity DAO happens to be working with many different companies that seem to be having an impact in the space, particularly in RWAs. So could you give us maybe a brief rundown of what that partnership kind of looks like, and if they were maybe the driving force for offering some of these RWAs for their own DAO and treasury management strategy?
I don't know if I can actually answer this question. I don't know enough. Honestly, you could. That's a better question for Cloris, who is our CEO. So yeah, sorry, I don't know.
No worries. It's just exciting news. I know they're involved in a lot of different things. So yeah, I guess on the same note around governance, I want to talk a little bit about the Cogito token, because I know that there's a number of utilities that are backing the token. It's using the platform. It's used in conjunction with, a lot of the transactions that need to take place for investors to, let's say, purchase some of these RWA-backed assets. But how does governance fit into Cogito and the token?
So right now, the plan for the token is revenue sharing and also fee reduction. So essentially, holders of CGV will be able to have reduced fees, and I guess when they stake the token, they'll be able to receive a share of the revenue. As for governance, there's things that we have planned. So when you have these fund tokens, right, you can't really do anything with them, not really, because they are permission, and you do need KYC to transfer them, right? And so you can't really transfer them to arbitrary addresses, meaning a lot of the utility across DeFi is limited. And so we are thinking of building a lending pool, so something like a Compound or an Aave that takes in these fund tokens as collateral and allows users to deposit and borrow stablecoins, right, against it. And sure, there's versions of these out there, and potentially we could integrate our tokens with these other lending pools as well. But for our lending pool, we could use CGV as governance token to adjust sort of like let's say the risk weights, and use it to just decide what new collateral and what new stablecoins to add next. But that's still like a bit far out. Our priority right now is launching the fund tokens.
Interesting. Yeah, for sure. Getting those products out the door is very important.
And when are those fund tokens launching officially, or have they not been launched yet?
So what we were waiting on was interactive brokers, but we have pivoted away from them, and now we're going with a different broker and custodian. And our application, I think, is in the approval process. We're very close to getting approved. Also, our bank account is finally set up, and so that's very much necessary.
Yes.
That took also a very long time, by the way. Getting a bank account is not easy. Then finally, we just need Circle. So we use Circle as one of our stablecoin, fiat on and off ramps, and that should be a quick application. So it's hard to give an exact time frame, because like things will just get delayed and take very long for reasons I don't understand. But hopefully this quarter, right? I want to say this. Yeah.
It's exciting.
Oh man, that's a hard commitment. I wish you the best of luck, my friend.
Yeah.
That's super exciting though.
I wanted to touch also on, like, I can wrap my head around the T fund and the G fund, but the X fund I wanted to know more about. Can you describe what that is exactly? Because it seems way less conservative than the other two funds and more maybe speculative or investment focused in the AI space.
Yeah, right. So X Funds is essentially a proprietary AI-driven automated fund. And so it'll invest in equities, and it will use the latest machine learning techniques, AI techniques to trade equities. And we are working with Singularity Net, and we're also in discussions with other AI-driven hedge funds that are looking to onboard clients. And we're trying to both build our own models, to train our own models to do this, and to look at existing technologies and see if we can integrate them.
Awesome.
But yeah, you are right. This is much more speculative, and essentially the thesis of X Fund is that it'll be X stands for technology. So it'd be a technology fund, right? So invest primarily probably in semiconductors, in tech stocks, and just try to time and beat the market, using latest AI techniques.
Oof. So this is like a first step outside of the area of like risk management, as far as like the funds offered on Cogito. And so like, how did this, I don't think that was part of the original scope, I believe. So like, how did that decision come to be? And then I guess, what do you envision like the next steps beyond that? Because obviously securities and stocks behind, let's say tech companies that might be listed on the NASDAQ is one thing. But I think investors, even outside of Web3, might have an appetite for things that might be a little bit more volatile or speculative even.
Sure. Yeah. So the idea for this X fund actually came from Ben Gersel, who's one of Singularity, or one of our co-founders and the founder of Singularity Net. So he had always envisioned this idea of an AI-driven, fund. And of course, this isn't new. People have been trying to do automated market-making strategies, automated trading strategies for basically since we had computing. The idea now is that we can tokenize this fund, which gives this type of product a broader access, right? Broader liquidity from the rest of crypto. And we know that there's a lot of degenerate money on crypto. And if they could get access to this type of product, like why not, right? A lot of crypto investors are retail. They don't really have access to AI-driven hedge funds, right? Like they don't get pitched that by their wealth management advisor. So it just kind of makes sense to give this type of product more exposure and more access. And as for assets it'll trade, the idea now is because, stock market is doing very well. Look at NVIDIA, right? 2x since the beginning of the year. It makes sense to give crypto investors a taste of what's happening in equities. And of course, if this model also trades crypto, then why not? It can, sure. Why not? I can trade Bitcoin ETFs. There's no problem with that. It's just right now the focus is primarily on semiconductors and tech.
Yeah, and forgive my limited understanding of how this might work, but how would it trade based off of an oracle of information inflow, trading off of real world events or whatever's going on in the markets? Would it just be tracking prices strictly, or would it look at a more broader spectrum of news to sort of make decisions?
Essentially, yeah, it would try to ingest as much data as possible. So it would analyze sentiment, it would read the news, it would look at, of course, all your technical indicators like price volume, and feed it into, I think for our first version, I think we want to feed it into a LLM and have the LLM decide, okay, based on all of these indicators, I want to long or short this particular equity, and I want to do X, Y, and Z. Basically, think of it as taking a fire hose of data and putting it into a black box, and then fine tuning the black box, and then it's spitting out instructions on whether to long or short.
That's wild. There's a project that we spoke to a little while back, and they were developing. It was a really crude kind of protocol at the time, but they wanted to bring access to trading, or access of trading to individuals globally that might not be able to purchase securities or stocks on the NASDAQ or the Dow Jones. They were doing it in a custodial manner, but it really begs the question from my side, do you see any sort of hurdles on the compliance side for something like this, and creating a digital asset that reflects, let's say, a basket of stocks on the stock market, and then someone in, let's say, India purchasing that digital asset to get some exposure? I'm not really familiar with the regulatory side on that, but it seems like it's something that is new, in fact.
Yeah, so from the compliance side, all our products are the same, right? We are a fund based in the Cayman Islands, right? So whatever jurisdiction whatever jurisdiction is allowed by the Cayman Islands, right, as investors, then they can buy our fund. And so I think that's global minus, I guess, sanctioned countries. So yeah, if an investor in India wants to invest in any of our funds, I don't see an issue with that. Of course, we do have our own internal KYC checks and KYW, know your wallet checks. So for example, if you stole money and then send it through Tornado and you want to invest in our funds, that'll probably get flagged. But other than that, I don't see any issues from a compliance side.
That's fantastic. Banking the unbanked with Cogito. I did want to talk a little bit more about real world asset tokenization. So I'm obsessed with this idea, the direction that you guys are taking down, let's say, a more risky path as far as real world assets, stocks, securities, etc. And I want to get your opinion on the idea of creating a fund backed by, let's say, low risk yield bearing real estate, for example, triple net commercial real estate. Do you think this is something viable at Cogito Protocol, or something that will ultimately happen in the markets?
Something that will ultimately happen, yeah, definitely. I remember, actually, I personally invested in a bunch of real estate projects back in 2017 during the ICO boom. Many of them didn't really go anywhere. But the concept of buying real estate on chain, I think it makes a lot of sense. There's this one project now called a Parcel on Solana. And they do perps, I think, for real estate. So they generate their own data, and then this data feeds a perp swap. And so you can long or short, like San Francisco, for example. And So for us, if we wanted to build this particular product, we would just create a new fund, which is easy to do. And in that fund, we could either individually buy REITs that correspond to the risk profile, or we would just buy an ETF, probably a BlackRock ETF that does the same thing, right? I don't think we are in the business of like going out and like looking at individual buildings and trying to rent them out or trying to do like renovations. That's not our business. That's someone else's business. We're just our business is really just in taking products and doing all of the paperwork to enable them to be invested by on-chain money. That's ultimately what Cogito is.
Very well put.
Fantastic.
Actually, you mentioned ETFs. Do you think there's going to be any future funds that are going to invest solely in ETFs? Maybe not the BlackRock IBIT Bitcoin spot ETF, but other sorts of ETFs or baskets of stocks.
Yeah, I think plenty of those funds already exist, right? Like I could go out and raise money for a fund that just like does like I only trade the Bitcoin ETF, right? Or I only trade the gold ETF, and then I could beat the market by just timing it well. So I think funds have done this for a long time, ever since ETFs have existed.
Man, it's like a crypto inception, buying cryptocurrency that is representing a Bitcoin ETF. It's backed by underlying Bitcoin. It's too many steps.
I actually, as a joke, I wanted to do that and just launch a new product that wrapped the BlackRock ETF. And then we would create a lending pool that let users, deposit Bitcoin against that and borrow Bitcoin against that. So you can get like this really weird, like Bitcoin wraps Bitcoin.
People would ape into that. Let's be honest. They would love that.
Yeah.
All right. So I want to ask you, Norton, give us the alpha. What's the fourth fund for Cogito? Like, what are you guys launching next? If you could talk about it.
I mean, X Fund is still under development, and we are, really focused on launching, T Fund first, and then after that, after a lot of testing our models, then we'll launch X Fund. We'll see how well these products do, how much adoption they get, what the users' pain points are, and then expands. But I imagine after rates are cut, which should happen, then interest will go back, or investor interest will go back to corporate bonds, green bonds. And then, at that point, it will make more sense to buy alternative products, right? When yields are low, investors want yield elsewhere. So I think what we'll do is probably reverse the order of our launch. So we'll probably do T Fund and then X Fund, and then later down the line, we'll do G Fund, which is basically corporate bonds.
Interesting.
Actually, maybe it makes more sense. Do you think the fourth fund might just be different iterations of the X Fund, like using the AI in different ways to trade? Maybe, like you said, there's one fund that trades treasury bills, but it uses AI to buy strategically at certain times, for example. Or would that just be added retroactively to the T fund?
Yeah, I think what you said makes sense. Once we have the AI techniques down, once we have fine-tuned this black box, right, we can use that to any type of asset class. We can even like trade uranium. We can trade gold and copper or whatever. I think there's a lot of interest in like metals, commodities from crypto traders. So maybe that could be something interesting.
Yeah, essentially anything you can already invest in, you can create a fund for, right?
Yep, exactly.
Yeah, meme coin fund is coming.
yeah, totally. Though I think the challenge with meme coin funds is that
don't.
They just and like you really have to like. It's a lot different from doing an equities fund, because like equities like sort of make sense, whereas memes make sense in different ways that LLMs probably don't understand.
Nobody does.
Yeah. Not a person or thing on earth that understands, but still fun. Well, Norton, I think we're coming up to a close here. But before we do, again, I want to thank you for coming on. We have one more question to ask you that we ask all of our guests, and there's only one simple rule. The answer cannot be your own company, Cogito Protocol. So out of everything in the space, every person, every event, every happening, what are you most bullish on right now?
Right now, I have to say meme coins, just because they are in the spotlight. I would say that if you haven't made money on meme coins this year, you probably need to rethink your strategy. And
I feel attacked right now.
Yeah, because let's think about it, right? Only. Bitcoin launched in 2009, right, as a meme coin. I was like, oh, look, we're an alternative store of value, right? We're this peer-to-peer cash system, blah, blah, blah. We don't need the government. It's a meme, right? It was a meme back then. It's still a meme today. So meme coins are not new. Meme coins have always been around. Meme coins will be the future. So, yeah.
I've never heard anyone refer to Bitcoin as a meme coin. And I'm so happy you said that, because it does make sense, but I'm sure it's going to trigger many people. So this is exciting.
It's true, though. I mean, there's not a lot of differences between Dogecoin and Bitcoin if you think about it.
Exactly.
They're both launched in a similar way, and they're both used as they're both transactable and used as a store of value. And they kind of the community that believed in it sort of willed it into existence and willed it into something that's worth something. Like we're all talking about, like Norton working on this platform that was the Bloomberg of Bitcoin. That would have never been possible if enough people didn't care about it. So absolutely, it's a meme coin that community grew rapidly, and it's fascinating to think of it that way. But I think the US dollar is also technically a meme coin.
Yes,
just backed by weapons.
Exactly.
Hotter take.
Memes backed by guns.
Yeah, that's all it is. Like really, since we came up the gold standard, it's what it became. So
we're so going to get canceled. Norton, thanks so much for hopping on and speaking with us. It's been an absolute pleasure. It's great to learn about your personal journey and what you guys are doing at Cogito, and very exciting to see the pivot into these different funds. I'm really excited to see the launch of the T fund, the G fund, and the X fund. I think it's going to be very, very impactful for the space. And you guys are in many ways kind of paving the way for real world asset tokenization outside of the major headlines that BlackRock and some other financial institutions are stealing. So again, thanks so much. And for anyone interested in finding Norton and researching more about Cogito Protocol, we've got some links in the show notes below. Again, thanks everyone for watching. Another Boom Room interview in the books. Stick around, because we'll be back next week with another exciting interview. Take care, y'all.